Okay, apparently I'm live, although I don't even know if you can hear my voice or see my screen. For once, the audio-visual check means something, because I am on a totally new setup. So here are the charts. If this looks okay, it's visible, let me know. My voice as well, the Bybit logo. How are we looking, gents? How are we looking? Wow, apparently the world hasn't collapsed. Brendan says all good. Peter says all good as well, two very trustworthy veterans of the live streams. Dumbo, I trust you as well, mate. How's audio, video? Can you see the charts? I'll explain the new setup in a moment. That's a funny story in itself, but as long as this is passable, I am more than happy. You might hear a bit of fan noise, all of that sort of stuff. Okay, great. So, in terms of story time, so on the day where ETH dropped like 8%, my internet just cut off at home. I tried to do the normal stuff of restarting it, you know, turn it off and back on again. The Soviet Union method. It just didn't work. And I called my internet service provider, and the best they can do is send an engineer over in like 2 weeks, right? So 2 weeks of no internet at home, which is why Donald was kind enough to cover the Monday session. So the current setup, I literally went and bought a new laptop. I've sought refuge at my sister's house, and I am now doing this from her place. I've moved in with my sister for the time being, because trading this and doing the content stuff with no internet or with 4G just isn't an option. So here we are. Here we are. You see the sacrifices we go through to give you our terrible views on the market. But yeah, that's the story. I'm glad everything sounds and looks good. Again, if you see a bit of background noise here and there, my apologies, but I think it's fine. I think we're generally quite all right. Is the aspect ratio weird? I think it's fine. It's supposed to be 1920 1080. Is it like full screen for you? It should be. It looks all right from my end, certainly. If there's anything weird, let me know, and I can try to fix it. But I think for a kind of ghetto rushed setup, we are doing pretty all right. Thank goodness. The funny part is Donald was invited to some sort of fancy dinner, and my laptop was supposed to be delivered like at 4 p.m. and instead it got delivered like an hour ago. So in 1 hour I had to set up everything, log in, and he was like at the door dressed in his fancy costume, being like, so am I staying? Am I doing the live stream, or can you do it? So a bit of a nail biter, but no, the good old duck has gone to enjoy his social life. And you're stuck here with me on a Wednesday. But it's great to have all of you. Everything sounds and looks good. Great. Well, that's better than I could have hoped for. This laptop's certainly doing the job. I think enough rambling. We can do an early start and let the rest of the audience catch up at the normal time. We are a bit early, but I just wanted to make sure it's not the end of the world. Let me move my mic a little bit closer. It's not filling the screen on the sides. Is that even if you full... Does it have black bars even with full screen? If so, I can try to fix that for the next session. But I thought it should be fine, because this is like a 3480, whatever, 4K monitor type of thing. So I've got it rescaling to 1920 by 1080. So the aspect ratio might be a little bit off, but whatever. I think it's passable. Cool. So there are a few things I want to talk about with regard to this market. Let's dive straight into it. Go full screen, 1080p, do all that good stuff. Let's get the stream underway. First things first, thank you to Bybit for sponsoring Technical Roundup. The channel is almost at 10,000 subscribers, which is absolutely insane. Thank you for all the support you guys have shown us since day one. We started when the market was in a bit of a rough spot, and now things are looking at least more interesting, and it's nice to have that sort of organic growth. We absolutely love to have you every Monday, Wednesday, and Friday, and also it's nice to have a sponsor where we can kind of just do our thing, do our content as we normally would, and as you can see, we've been going for months now. No obsessive kind of ref link aggression. in any of our live streams. We have full control over the content. So big up to Bybit. A lot of sponsors are a bit more, aggressive with that stuff, but thank you to them. Their links are in the description. Second of all, if you'd like to hit like on the video, that'd be very much appreciated. We can win the war against the YouTube algorithms. This intro is already way too long. How about we look at some markets? So we'll start with Bitcoin. The ones I really want to focus on today are Bitcoin, Ethereum, Link looks really interesting, and then we can look at some DeFi stuff and describe that more broadly. So in terms of a bit of a recap on Bitcoin, so on the weekly time frame, let's start with the monthly. Let's work our way down because it has been a while since our last session. Something we discussed, I think it was on Friday or in the last session, is kind of Operation Save the Monthly Close, right? So you see we've got confluent levels, this little shelf we've talked about between 10.3 and 10.7, coming off of this highest close here and this highest close here. And these two levels, again, when I draw these boxes, more often than not, it's either a consolidation or two levels that are close to each other. In this case, it's two levels that are close to each other, especially on the really high time frames, 10.3, 10.7. That's definitely close enough to warrant boxing them out, if you will. And you can see it's quarterly, monthly, so from the same ilk. Where we are right now in the last full trading week of the month, we're at support, right? I think Donald has something very similar using this consolidation as his support structure. And this serves to reinforce the point we talked about even all the way up here when we were closing closer to 11K, is just because you get a break of the level, once you get a close above support, which may look like the level's been completely cleared and we're far away from it, it doesn't mean that the level isn't going to get retested. And it's something we discussed when the market was much higher, that you have to be prepared for at least some sort of retest, even if it ends up being uncomfortable. So the benefit, I think, of trading higher timeframes is that the areas are really clear in terms of which levels matter. And there's often a lot of space between levels for swing trades. Just even looking at this high time frame chart, you can see there is plenty of space above market and below market once this retest resolves one way or another. But the price to pay for that high time frame clarity is that the wicks that happen at these levels will make you lose faith in them and makes it really hard to trade the first test or the first reaction, right? So everyone's talking, well, 10.7 support, 10.7 support, or, 10.3, 10.7, whereas this wick was just under 10K, I think. Now, if you've got a really short-term perspective, it looks like the level's been completely nuked, support invalidated, end of the world. But if you have this higher time frame perspective and some experience, you'll know that price trading below high time frame levels on a lower time frame basis doesn't necessarily mean that that level is broken, right? You might just have to stomach some chop. So with the monthly time frame, again, have to wait for the monthly close, etc., etc. But I think directional bias-wise, it's reasonably clear, to me at least. I'll still use this monthly and quarterly box made up of 10.3/10.7. I think Donald's, again, lands in very similar areas. If the monthly close respects at its extreme the lower boundary, so monthly closes above 10.3, I'll still be inclined to take longs or have a bullish directional bias for next month, simply because that would suggest a retest of support that held. The most bullish close I can come up with is a close back above the upper boundary. So to be clear, closes above the lower boundary are still good and bullish. It means support held, so above 10.3. The bullish variant of that, kind of higher probability bullish continuation, would be a close above 10.7, which is the upper boundary. That would be quite sick, and again, would suggest a move towards the next level at 14K. That said, of course, given we're dealing with such an area, the opposite of that is true, that if we close below the lower boundary, so below 10.3 on a monthly basis, again, it depends what the weekly and the daily look like, etc. But generally, that would suggest a kind of failed breakout here above our monthly shelf, loss of support, and then I would look to get positioned for moves towards 7.7. And obviously, there are weekly and daily stumbling blocks along the way, but just trading the monthly chart, I think that's as clear as I can make it. We've got a shelf at 10.3, 10.7, currently acting as support. If it does its job, which means at least holding 10.3, ideally above 10.7, then I still think we are go for 13.8, okay, purely technically. Closes below the lower boundary would be strong evidence of a failed breakout, and I think I'll look for moves towards 7.7. The final thing I'll say about the monthly is it's one of the more kind of flexible timeframes. By that I mean, if I get a monthly close that I think is, gives me evidence of direction one way or another, and then I look at the weekly time frame and it's just not giving me alignment with that monthly close, like a bullish monthly close, and then the weekly just starts to roll over and I get consecutive bearish weekly closes, I'll usually defer to the weekly and the daily time frame. I won't marry monthly closes as much. If they align, great. If they don't, I'll use the weekly time frame to shift bias. Okay, but pretty straightforward. Support, resistance, support, waiting for the close in the red box. Is that reasonably understandable so far? Do you kind of see where we are now? I know I don't normally alt-tab, but I'm also on one monitor, gents, so apologies for the lower production quality. I know, I'm told I sound a bit different, but when I met LoomDart for the first time in person, he gave me this really weird look and said, you sound exactly like you do on the internet, and apparently that's quite a rare phenomenon, but whatever. So that's the monthly time frame. The weekly is pretty interesting as well. So one thing you'll hopefully remember from previous live streams is that I like to look at weekly closes at monthly boundaries, as discussed moments ago, to get a kind of sense for how the monthly candle is going to resolve. We can't always just trade the monthly time frame. It's just not very practical. It moves away too slowly. So sometimes we need to jump down a time frame or two to build a faster moving picture, right? Clear right now, but if we just overlay and work with what we've got, this is the same monthly shelf. For me, it's just chop at these levels, right? You see, a couple of weeks ago, we got a close. Oops, I should go to my arrow. So for me, the weekly doesn't yet shed any light on how this monthly retest is going to hold, because look, we've had the same type of choppy price action on both boundaries of this red box, right? We had a close below, should have been resistance at the level. It wasn't, like barely closed below, no resistance. And then in this case, barely closed above, and no support at that boundary either. But what is clear is that we're just pretty much having chop on both sides of this monthly box. And this is something we've talked about as well with regard to magnets for price or any other cringy terms you prefer, is that just because the monthly time frame or the lower time frames at monthly levels may deviate well above or well below it during the course of the month, more often than not, or quite frequently, price will settle back towards or closer to these levels as the monthly close comes to comes to form. It's a bit of a weird thing. I know the Duck has some sort of edge or system where he essentially plays mean reversions to these high time frame closes. But in this instance, just interpreting the weekly time frame evidence, if you will, at these monthly levels, I can't really give you anything terribly clear. The levels are still good, 10.3, 10.7, but you can see pretty much failed breakdown and then failed breakout, and all the price action the past couple of weeks has pretty much been using these boundaries as support and resistance. And it's tight, right? There's not a huge range that we've been in for the past couple of weeks, and I'm certainly not comfortable taking any strong views with the market looking as it is right now, right? At least on this time frame. If we just look at where the market is like right now, we can look at the daily time frame, and I've got us at support at the 10.3 level. Now, a couple of things I want to talk about. The first is that the one play which made sense, and we discussed it in my last session, was a continuation long from 10.7 into 11K, this area of prior lows, last low pre-break. That played out very nicely. I caught a bit of that, not as much as I would have wanted, but the 10.7 to 11 kind of very short-term FTA trade that we discussed was quite neat. But then, of course, sold off back to 10.3, right? So where are we now, or what am I looking for now? To be honest with you, in terms of market structure, right, looking at recent price action, we had a break higher, broke out of this consolidation and made a higher high, right? I know the overall context is lower low, etc., but looking at just very current price action, because I want to discuss potential trade ideas, we could potentially be setting a higher low here, right? Ignoring this breakdown into high time frame support, you then have a higher high. We're now retesting 10.3, right? So potential idea that could materialize if we stay within this range that we discussed on the weekly time frame is simply a move from support to resistance as the first trouble area, right? So 10.3 to 10.7, and then potentially higher into the 11K area, or again, trading into this last layer pre-break for continuation. I want to talk about the price action that actually occurred at 10.7, and someone asked me a really good question about this via DMs. You'll recall that I keep talking about the same thing, like lightning doesn't strike twice, or double fake outs aren't very common. If we apply that logic to 10.7, then we can come up with some pretty good or reasonable trade ideas at the level, right? Because we had a break of this level, and then it failed to act as support on a pullback, and we hit 10.3 straight away, right? So technically, if we're looking at this level just in terms of support resistance, this move above the level, given it didn't get anywhere and got rejected by resistance, we could interpret that as a failed breakout or deviation, whatever, above the quarterly level at 10.7, okay? So where is resistance? If we continue ranging, which is quite reasonable, and we rally back into 10.7, this is the only level that I would be comfortable selling. Why? Because it's not very common, as we discussed, that price offers these double fake outs, right? We have resistance, market breaks above resistance, right? So you anticipate for it to turn to support. That's very ugly, but I'm on a touchpad. Bear with me. I will try to be slightly better. Here we go. Market breaks out, pulls back to the level, should be support. It fails. Okay, normally when it comes back to the level itself, I know some of you are groaning right now because of how many times we've covered this, but hey, if these patterns keep happening and working, I guess I'm going to keep talking about them. So you've got resistance, the failed breakout portion at the high, and then resistance is at the level itself, right? So you'd expect, if the market's bearish or it's going to sell off, for the original level to do its job, okay? Now, what's far less common, so this is kind of the normal pattern for continuation in the market. What's far less frequent is that once a fake out has already occurred, that the market comes in and fakes out twice, right? So it comes up, closes above again, pulls back, and then fails again. Those types of double fake outs or double deviations, whatever you want to call them, I just think they're some of the rarest or worst performing patterns that I've observed when dealing with this type of technical structure. And we can use that to our advantage for articulating long ideas, right? If we bounce from 10.3 to 10.7 and the market doesn't get swiftly rejected from this level and you don't get like an immediate lower high, because from a market structure point of view, that would make sense, right? If we're getting bearish continuation, there's no reason to form a higher high above a level of resistance. So for long side ideas, what I'd actually prefer would be a push into this level which fails to act as resistance, right? So back into this cluster here, and really anything above 10.7 at this stage, I'd probably look to buy into the top of the previous range, right? So to be clear, we already had the fake out above 10.7, so 10.7 should be really good resistance. If it isn't, I think we get to ride some longs towards the top of the range, 11.4, 8, 12K, whatever, basically resistance here. So what the long trade would look like, if you're not comfortable taking 10.3 to 10.7, even though I think that's a reasonable idea, depending on your whatever intraday preferences, something like this, push back into the level, don't get rejected, and then some sort of pullback continuation, or maybe even pull back to the level itself if the market's feeling generous. I think that would set up for a nice squeeze higher. Okay, so that's kind of my preferred bullish setup, would be above 10.7. I see no reason for that level. Like for me, like where is resistance, right? Yes, I still give some weight to this 11K area, but just because of the quarterly context, I would be comfortable buying breaks, not buying breaks, I suppose, but strength above 10.7 would be good enough for me to get long, right? On the short side, it's kind of the same idea. Both of my existing biases are based on the 10.7 level. It's one of those strange ones where I think if you're going to sell, that's pretty much the only level that's worth a shot. But if it's not there, then it's going to be nowhere or much higher, right? Sometimes the market will set up in such a weird way. You know, at times it'll give you really nice levels above market to sell, below market to buy, or vice versa. But other times I'll just look at it and have one level where I want to do business, depending on the price action. So best resistance on the chart, 10.7, especially given the fake out above. But if it's not the best resistance on the chart, then you bet there's going to be a squeeze from that level, in my view, and I'm going to look to take it to the next trouble area, right? So that's, I know it's not the clearest view, well, neither are the technicals, but long story short, quarterly level 10.7, We've had a failed break or attempt above it on this instance, therefore expecting resistance. So if you're bullish, I'd want the best resistance level on the chart to fail before getting long, and that for me would mean something like this. Okay, in terms of if the market rolls over, what would I look for? I would not be comfortable touching anything before the 9.6 weekly level. Okay, I'm not too keen on rebuying these lows here. We spent basically a week consolidating here before trading higher. And if we trade back to this level again, then the potentially bullish market structure scenario of kind of low, high, higher, low, higher, high, etc., that will have been invalidated. So I just don't think 10K itself is a nice catch area. If anything, even for short-term trading, I still not think a 9.6 is good as a weekly technical level, but also because it's resting right below these lows. So it might be a bit of a liquidation run, cleanup crew setup, pretty much A to B bounce from 9.6, and then we'll see where it goes from there. Okay, but I think it's important to state that if this is the breakdown, not going to be a big fan of rebuying the daily level at 10. I'll probably wait for 9.6. We can look at it on an intraday basis, see if we get anything clearer. I think if anything, it makes the case for 10.7 slightly clearer on the 4-hour chart. So we've got previous support, right? Broke down resistance, and it was the last support before this breakdown again. So even, this kind of not proves the point. I don't like using language like that, but I think it's reasonably clear that this is a nice level. Okay. Rallies. If you're going to sell this market, I think 10.7 is the place to do it. I'm not a fan of reselling into this double top. I think that trade has already played out. So something like that would be reasonable. And then, FTA, whatever happens. But for longs, the same level would really need to fail. Just gets completely smashed. And then any sort of consolidation, I look to get on board to basically fill in this breakdown. I've just spent like 20 minutes talking about 10.7. I'm sure if you've watched any of our content, you're intelligent enough to kind of know what I'm getting at. But does that sort of make sense? Paul Gromenauer? Is it German or French? I think it's French, right? Double fake breakout. No, it must be German, not French. A-U-E-R. No, it's got to be German. That can't be French. He says double fake breakouts are rare. Is gold, Mr. Minsky? Yeah, it's just one of those things that I've lost enough money on similar type of setups to just have it burn into my memory. It's pretty much the best way to develop these patterns. Brendan asked the question: possibility of 11.1 being a bearish retest before downtrend continuation. I think I've addressed that, right? For me, for continuation, again, I don't think there's anything wrong with saying like 11.1, let's just highlight the level in broad terms, like roughly around here, right? Like 11.1 is resistance, right? You have support, 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 resistance. So it's still resistance, and wouldn't this be a nice level to sell before trading lower? I still think that's totally reasonable, but in these situations, you kind of just have to make a judgment call. And for me, the judgment call, I'm going to give more weight to the high time frame quarterly level than I am to the lower time frame level at 11K. So most of my decisions, should we get a pop, will be based on 10.7 as opposed to the 11 level, which has already been tested. Still think it's valid. It's good to have it on your charts, especially for intraday basis. But I think if I'm trying to catch like daily and weekly moves, it's really got to be the 10.7 and 10.3 levels with where the market is right now. I think that's reasonably clear for Bitcoin. So we've talked about the monthly kind of being at support and building a bias coming off of the monthly close, which is coming up pretty soon. It's the monthly timeframes at support, right? That's the point there. 10.3 is monthly support. On the weekly time frame, I'm kind of going to pass because we're just having chop between our two high time frame levels, more or less. No decisive break in either direction. Purely technically, again, because of the monthly and the daily, etc., we're at support at 10.3. But when I say weekly, I just mean the weekly closes haven't been particularly instructive with regard to this market. On the daily time frame, Again, same levels, nothing crazy in terms of information. I think you can start building a tentative case for bullish market structure as long as 10.3 holds. So you end up getting something like this. You've got lows, trades higher, finds support at a monthly level, and then hits the next monthly level, if not a higher high into resistance. Like, I can see the case for that, but simply because of how this is set up and the fake out above 10.7, instead of trying to catch the higher low here, which I think is still fine, just not my cup of tea, I'd rather look for continuation trades above 10.7, which also happens to be the best resistance level on the chart. And this is like a bit of logic that we're going to address on ETH, but I hope that's clear. If not, we can go back to Bitcoin at the end always. But it's sometimes, or perhaps very often, reasonable to look at a market and find a high time frame level and to simply say, look, this is the best resistance structure on the chart, and if that level breaks, I'll long. And that's it, right? Just even that kind of seemingly simple reductionist view, I don't see anything wrong with articulating views in that way. Because if you are correct that the level is so important and, you know, you've correctly classified a turning point in the market, then you can also expect a big trending move to follow if it breaks / if that big level is reclaimed. Bitcoin at 6K is like the best example of this principle at play, and this is one of my few good calls in the universe, right? I've got it on my fridge as got something right on Twitter. But when 6K broke down, my argument was essentially, look, 6K is now the best resistance level on the chart. If you want to get long Bitcoin, instead of trying to knife catch at 5, 4, 3, you know, for potentially days information, why don't you take the easier trade? You've got the best resistance level on the chart, which is 6K. Why don't you just long blindly the break of 6K and ride it up? It's probably going to be a faster trade. It's probably going to be an easier trade, right? And the good thing about those levels is your exact entry doesn't really matter too much, because if you're positioning for a high time frame trending move, the requirement for a precise entry is way, way lower. So if you're scalping or you're doing intraday level to level, trouble area to trouble area sort of thing, then yes, the amount of room you've got to play with, certainly if you're marketing in and out, etc., just isn't very high. And you need to be more precise when you're dealing with less space. But if we're talking about like weekly, monthly, high time frame trends and really key levels, then obviously the requirement for your entry to be precise is significantly lower. So if that doesn't make sense, let me know. Again, I'll check the chat in a moment. But we can apply that logic to ETH, right? If we look at ETH on the weekly time frame, we've got a bunch of confluence at like 370 to 390. And that comes from, I'm just going to draw, just like we did for Bitcoin, we kind of end up having a shelf here. So that's the monthly level at 394. It's basically the monthly swing low. And the weekly level, I think that's from the lowest close, right? You can see from the current price action, it was support, turn resistance, and we're currently coming off what looks like a bearish retest of that level, right? For me, support is lower down. I'm not terribly fond of the structure in the sort of low 300s. I'm much more comfortable around the 300 handle itself. Again, whether you want to use the monthly level at 290, the weekly at 275, you can even draw out this whole consolidation here, right? The cluster, you can see it all lands in the same area, closer to 300 than anything before that, right? So with that in mind, using the logic we just discussed, what is the best resistance level on the chart? Well, it's this 370, 390 level. So instead of trying to knife catch wherever this is, why don't you say, I'm just going to long the break of, you know, if you want to be generous this area or just the level or whatever else, and then I can catch a high time frame trending move towards 600, 700 or just much higher prices. Even if we consider the red box as being the previous range low, we can be a bit sneaky or generous and delineate the previous range high, right? So instead of trying to knife catch whatever the hell this structure is, why not just say longs are currently off the table until we break the best resistance level on the chart. And when we do, I'm going to be able to capture like a 2x basically until the next high time frame zone. Is that the best approach, or is that the most tenable thing on an intraday level to level basis? Probably not. You still have to do business with where the market is. But if you're positioning for high time frame trends, I still think looking at the best levels and waiting to do business there is superior. Okay, and with where the market is right now, it certainly looks like a bearish retest in progress. just by looking at the weekly candle closes, which unlike for Bitcoin are much more helpful on ETH. You have this level acting as support. You get the big bearish engulfing, which, you know, clear shift of momentum at that point. I mean, just look at the range of this candle, wipes out the top of the range and then closes below the bottom of the range. That's about as rough as you can make it. So I wasn't really keen on these 2 weeks here. Yes, they were higher closes, bullish candles, etc. But in terms of structure, nothing was regained. Just looked like a bearish retest. I tweeted as such, which means absolutely nothing. You know, Twitter, you know, tweets don't make money. I didn't manage to get short this market, which is hilarious in itself, but whatever, that's a discussion for another day. So for me, ETH right now is coming off of resistance, and I've got support, the nearest level, probably around 300, round figure. Okay, now that doesn't mean it's just going to move down in a straight line and shorten at market. What I really don't like is chasing momentum, which is significantly away from structure. I'd rather at least get some sort of retrace to the most recent lowest close here and see if the market finds resistance, right? Closer to about, what is that, 330, 340? Let me see. 350 even, right? So I think chasing it here probably isn't the best trade in the world unless you've got some sort of continuation, pattern, edge, whatever. At the very least, I'd want to see resistance at this 350, 360 level, and then I'd still look for a leg lower towards support. Now, again, if that changes and we get a break of 390, etc., I'll be the biggest perma-bull on the planet, hopefully not at the top this time, and I'll look to take swing longs with big high time frame targets. But the best I can do on these live streams is look at what's in front of me, and for now, this looks like we are just dropping or reacting to a bearish retest of weekly structure. Okay, looking at it on the daily time frame, you can see that this sort of also suggests, you know, doesn't prove the point. I really hate using language like this proves or this demonstrates that. Technical analysis is way too subjective to use language with such a high degree of certainty. But for me, at least, this is suggestive or is some evidence for the fact that you really got to be patient if you want to be trading weekly and monthly levels. I know it sounds cliche and cringe, but if we just look at the price action, even after the breakdown at this level, right? So you get a daily break in market structure here, okay? And then, you know, this is the daily chart. So all of these are trading days, just one full day. Look at how much time was spent essentially at resistance before even getting some sort of impulse down, right? And, you know, you might get shaken out on this day, this day, this day, or, oh, this engulfing candle closed back into the range. Like, there's so much that can shake you out on when trading high time frames that, you know, trade management is probably even more important than entry triggers or any of that stuff, right? But going back to the analysis side of things, still looks like a reaction to weekly resistance. I think the market is an area of support now with this lowest close, pretty much the bottom of the range, right? But a daily close below that, I'd expect to find the market to find resistance in this area, right? Maybe if not at the red level, then at the very least somewhere within this old range, right? This consolidation, and then again to continue towards support. Nothing extreme, right? It's just a basic case of you've got monthly and weekly resistance. It seems to be doing its job, and the next level, if this continues, is monthly and weekly support. I think that's another thing which bias can sometimes creep into. Like, people who trade high time frame levels, they'll be pretty chilled out and be like, okay, well, I've got high time frame support here, high time frame resistance here, and maybe there's like a 5, 10, 15, 20% move between those levels, and for some reason they'll be called like, oh, you're a perma bear, bear tard, bull tard, etc., etc. Whereas someone applying the same trade logic just on a different or lower time frame is, you know, isn't criticized for the same thing. So when you see like either myself or the Dark or just other people looking at prices which seem far away from market, it may look extreme, but in the context of a trading system, it's pretty neutral and nothing sensational like that. So yeah, with ETH, I still think we get some sort of bounce or wick or something. I don't think it'll travel in a straight line, but until high time frame resistance in the 380, 390 area is reclaimed, I've still have to interpret that as a bearish retest with support at 300. And again, invalidation is pretty straightforward. This 380, 390 area is really well established. So if I get a break of structure, some sort of higher high through this area here, then the magic red box will turn to support, right? And I'll look to buy dips or continuation into the top of the range at 433, and then to $10 million as target 2, and target 3 is Vitalik becoming president of the United States, even though he's Canadian or something, right? So yeah, that's ETH. At least that's what's in front of me on ETH. Let me quickly check the intraday to see if there's any further hints there, and then hopefully answer some questions. Yeah, I mentioned a second ago that some sort of bounce green candle mean reversion thing wouldn't be unreasonable. And it kind of makes sense with where the market is now at support, right? You've got prior highs, the bottom of the previous range, and kind of jumping into this level now. So some sort of reaction there would be reasonable, but not tradable under my system at the very least. But even taking an intraday lens, we can just delineate the range that ETH is in. Lowest close, kind of bottom of the range support here, and then top of the range SR flip level here. Okay, so kind of moved from retesting monthly and weekly resistance to this intraday consolidation at the moment. But I think the high time frame picture is a bit clearer and slightly more important. Does that make sense? We're almost at 100 likes and 300 viewers. Thank you so much for your fantastic support, especially on this new setup. Feels, if you could see a picture of what I look like right now, it'd be hilarious. It's kind of just like some sort of vagrant homeless man drawing lines, but whatever. Always love spending time here. Sandra says yes, thanks. So I think ETH is reasonably straightforward. Digital nomad, yeah, man, gosh. So, yeah, just to very quickly recap to anyone who just joined. Bitcoin, monthly, support, weekly, unclear, daily, at support. I think the trades, either way, will come from 10.7. I think it's the best resistance level on the chart. So rallies into there. If they don't find resistance, right, I'd expect a very fast move to fill in the rest of this gap closer to 11.4. I really think 10.7, sorry, is the do or die level there. The way I normally approach this is that if I get something on the hourly, usually, that gives me a risk-defined sell, like a double close pattern or some sort of overthrow deviation, etc., I'll sell it. And then if it doesn't drop like a rock, I'll get the fuck out of that trade and then look for some sort of flip at the level or some sort of consolidation to give me continuation. I suppose that's the answer to this, to the question of, okay, so you've got 10.7 as your key level, and you're here live streaming telling me it could go up at that level or it could go down at that level. Fantastic live stream, useless TA, up or down, etc. Like, I totally understand that criticism, right? Unfortunately, my trading system doesn't include a crystal ball, and I have to make decisions on the fly and as price evolves as to what side do I want to take when price reaches a level that my system tells me is significant. Right? So it's like an investigative approach to support resistance. If I get hourly time frame evidence that 10.7 is resistance, and I get a risk-defined entry trigger to sell that level, I'll take it. Alternatively, if it just gets blasted, or it's bullish, or it just starts consolidating above, or using it as support, well then obviously I'm not going to sell that level, because probability doesn't favor that decision, and I'll look to take it to 11.4. That's the whole point of being, I think, a discretionary trader, is that, or at least the way my system works with discretionary trading, and I've got a whole thread on this on my Twitter, so please go check that out if you'd like additional context. But I use high time frames to tell me which areas matter, and then I use my discretion on lower time frames to tell me who's in charge at those levels, and I try to position accordingly. Very, very rarely do I just set limit orders, unless it's like stink bid, altcoin, whatever, but generally I don't set limit orders. I map my market with what I think is going to be important, and then use my discretion and understanding of lower time frame price action to tell me which side to take at that level. It's not always 50-50. Sometimes I will have a directional bias and I almost certainly want to be a seller or almost certainly want to be a buyer, or I will, almost certainly avoid one side or the other or give preference, etc. So it's not just like a complete coin flip at the level, but if the context doesn't tell me that I should lean one way or another, just like in this case, then I have to lean more on discretion and decide there and then whether I'm a buyer or a seller. So yes, sometimes context will tell me definitely don't sell this, but look for a flip, or definitely don't buy this and look for a flip. Other times it doesn't, and that's the beauty of discretionary trading. Have to navigate a whole bunch of gray zones. Is that kind of more helpful? Did that explanation make sense with regard to up or down great TA? Because that's just how my brain and how my system works. So if I can provide even a modicum of further context, then I suppose I'll be happy with that. Peter says yes, and I tend to trust him. But yeah, just a whole lot of discretion, right? Yeah, sometimes I will look at the level and say, I will absolutely not buy this, but I will sell it if it breaks. Or I will absolutely not sell this, but I'll buy it if it breaks, etc., etc. But other times, if I'm like, yeah, I mean, this is a range, it's a bit of a toss-up, I won't have a bias going into a level. That's just, how my system operates. Cool. Glad I could shed some light there. So that was the Bitcoin summary. ETH, bearish retest, 370, 390. I think the easier long on the table is either at high time frame support or on a break of high time frame resistance. Anything in between is for intraday trading / chop, but I think those are the easier trades that are available. Okay, so for the long side, I'm just not terribly keen on knife catching anything within this consolidation. I think on an intraday basis, if you want to play the range from range low to range high, etc., in a risk-defined manner, should it present itself, all of that is totally reasonable. But if we're talking weekly live stream high time frame stuff, I want to do business at support, or if the best level on the chart, that's resistance breaks. That's about as straightforward as I can make it. And again, the reason I like to trade these high time frame levels is because they give more time to make decisions. They work, they lead to big moves, and just generally it's far less likely to be noise than useful information. I suppose the final point, which is related to all of those, is I like high time frame levels because there's a lot of space until between A and B. And when there's a lot of space, the requirement for a stringent entry evaporates to some extent. So that's ETH. Brady says, stupid straightforward. I hope that's complimentary. ETH BTC is a very interesting one. It looks rough, but not rough enough for me to have a kind of strong view with... I mean, look, it's still at support, right? I know it's called resistance. That's because that level was flipped. The duck keeps talking about like the head and shoulders pattern. We did it in the newsletter as well, which I totally understand, right? This type of thing. We've got the high, the higher high, the lower high, etc. But these patterns are only really confirmed once support breaks, right? Once the neckline breaks and then there's like a big move from A to B. Like that would be fine, but I think if you ask me where is, in terms of probability, the worst place to get bearish this market, it kind of has to be like at support, right? Like if I showed you this where the market is right now, it's like where is the worst place in terms of probability for you to be a bear? Hopefully you choose the level of support, right? I think if that breaks in like a daily close below 31s or wherever this level is, sure. Then it's kind of easy to get bearish because back to the same old talking points, there's a lot of space between A and B. But where the market is right now, I'm going to kind of avoid having strong views until proven otherwise. So yeah, EPTC, there are like cracks in the armor, if you will, but I'm not going to jump on board anything too gloomy as long as my level holds. Simply because probability says that's not a, just not the best place to get very bearish at support. But below it, yeah, sure, I'm with you all day. Like, for example, if this market were just to bounce from here to even the first trouble area, into these prior lows, you would look at that and say, well, yeah, it's obvious. It bounced from support, right? And whenever the market sets up in such a way where I want to make a decision, but the contrary would be incredibly obvious, then it's usually not the best trade. I've probably articulated that terribly, but I think if you're taking clear setups or setups that are, technically compelling, if they don't work out, at least some element, I think, this is my very personal view, I'm not no trading wisdom here, but in my experience, when I take setups that are really good and they don't work, and I'm like, oh, fucking hell, well, that was the far less likely consequence. Well, that outcome was bloody unlikely, right? That's sort of something that comes to mind when really good setups don't work. Whereas if this were to bounce right here, I'd just be like, yeah, fair enough. I mean, it was at support. And I think that's like an important litmus test for how good are your setups, or at least in my system it is. The trades that work really well are the ones that are kind of least surprising. If you find yourself constantly not being surprised or expecting to be stopped out, then maybe the trades you're taking just aren't that great. Like, oh yeah, fair enough. I mean, it really could have bounced. Don't know why I shorted that. Like, is that really such a good trade? Probably not. Your invalidation, I mean, another way of saying that without making it terribly confusing is that your invalidation should mean something. It should be like, oh, fucking hell, well, okay, that looked bearish and it's pulled a full reversal. Like, that's fair enough. But if you're constantly getting into trades where you're essentially gambling, and then the more likely outcome, such as bounce from support or bounce from resistance, whatever, plays out, and you lose money on that, then you probably weren't so selective about the setup in the first place. If that made no sense at all, let me know and I'll try to rephrase. But it's just something I kind of pay attention to. The one sentence version of that is, how surprised would I be if this trade goes against me? There we go. This is finally a non-idiotic articulation of what I'm trying to get across. How surprised would you be if the trade goes against you? If you wouldn't be surprised at all, then it probably isn't the best trade in the world, right? Whereas if you are surprised, like, well, fucking hell, that was really the least likely outcome there, then the setup probably has a bit more weight to it than not. Do you see what I'm saying? I'm just waiting for someone to say yes. There we go. Peter says yes, and I trust him. Anonymous as well. He who sees the past is surprise-free is bound to have a future full of surprises. yeah, I understand that. But I just think, if you're taking setups and being wrong is expected, then those trades probably aren't great. Like, there's trading wisdom where people say, oh, you should go into every trade expecting to be stopped out, right? It's supposed to be like some sort of trade management or risk management wisdom, but it sounds like a whole lot of bullshit cope to me, right? If you've just risked money on a trade and the first thing you think is, oh, well, yeah, it's probably wrong, probably going to be stopped out, whatever, then do you really want to be in that trade? Like, I know it's one of those trading wisdoms that gets a free pass because it sounds so clever, right? But in my view, if whenever you trade, you're thinking, well, this is probably wrong, I'm ready for the loss, like, why the fuck are you trading that market or that setup anyway? Most of the setups I trade, I'm like, fuck yes, finally I get to, do business at this level, market looks really good, I know I have an edge here. I'm normally pretty, switched on or keen to trade the setups when the market gives them to me. I agree with Brendan. Going to trade expecting to get wrecked, you're terrible at trading and always expect you to suffer. Yeah, exactly. It's just defeatist. And I think it also gives people a chance to be lazy. Like, they'll just take shitty setups and like, oh, well, I'm only risking 1%. I expect to be wrong anyway, right? That mindset can swing too far the other way as well. So if you find yourself taking setups and you're constantly saying, yeah, it's probably wrong, I'll only lose 1%, risk was managed, happy to be proven wrong, like all this bullshit, maybe just don't trade that setup. Like, if you're so allergic to taking your own trade ideas, maybe take another one. Yeah, that's my view on that topic anyway. That's not to bash on risk management. Yes, you should be prepared in terms of your stop loss and whatever risk on the trade to be wrong. But that doesn't mean that you should expect every trade idea to fail. Because if that's the case, maybe you need some fucking better trade ideas. Pessimists make the worst traders. People who constantly doubt themselves make the worst traders. Yes, they will make for good risk managers and constantly accounting for and catering to the worst case scenario. I understand that, but it makes them good risk managers, not good traders. And there's a big difference between being a good risk manager and a good trader. You just can't be always defeatist, pessimistic, and expecting the worst outcome if you want to trade. You just fucking can't. It doesn't work. I suppose the best risk manager is the one who just doesn't take any trades and I suppose sits in stable coins all day. Doesn't make that person a good trader, right? I agree with Peter. Don't trade at all if you think wrong all the time. Yeah, exactly. So, yeah, ETHBTC at support. Link is really interesting. Let's talk about Link. So, one thing I will say about Link is I suggest you sign up to Technical Roundup. If you haven't already, link is in the description. It's our free weekly newsletter with the duck. We have all our levels, explanations. If you want the shorter version in text format, that's the place to be. So, Link is at support, right? it's at the bottom. So the way strongly trending markets set up levels a lot of the time, and this is hopefully something you've seen in other videos. This is going to be absolutely miserable with my touchpad, so bear with me. But generally, you'll get an impulsive move, a consolidation, impulse, consolidation, impulse, consolidation, etc. And the issue is, or I suppose the reason the market forms in such a way is when the consolidation breaks out, right? Let's say like it does here. There are a ton of participants waiting to get in on the pullback. But if the market's strongly trending, then the consolidation itself is enough for buying pressure or whatever market microstructure mechanic you prefer to build up before another leg higher. And these markets that are fast moving and aggressively trending just don't give you the luxury of a pullback. Now, that doesn't mean that support resistance goes to shit because the market never pulls back. First of all, the levels themselves are still valid as ever, right? So they're not going anywhere. They just haven't been retested yet. But also, it's the consolidations that occur between impulsive legs themselves, which act as support and resistance. And the link chart is a good example of that. The ETH chart as well. There's plenty of evidence for these types of structures, right? And that's pretty much the composition of the link chart. You'll see on the daily time frame, but on the weekly time frame as well. So bearing that in mind, for me, with where Link BTC is right now, and I think the USD pair, which we'll look at, is very structurally similar. I've got Link at high time frame support around 74s. Wait, let me just zoom in on that. Yeah, 74K, right? Which is essentially the bottom of this consolidation here, or the lowest close. I think the reasonable way to think about these structures are just as ranges, right? So you have an impulsive move, then you have resistance form in the market, support form in the market, etc., and then it breaks higher. So yes, while we are boxing out the whole consolidation, what we're essentially boxing out is previous resistance in the range and previous support in the range before the market ran higher, right? So with where Link is right now, it's these clusters, that's all they are. It's support resistance. I've got Link BTC at support. So from a short-term trading perspective, I think looking for a bounce from A to B would be reasonable if you get something risk-defined. And I think we can look at lower time frames to get a kind of sense of what that might look like. So for example, a pattern that I quite like in these circumstances would be a close below the level, ideally not too far, just like, you know, a technical close below the level, which then closes back above it. Hopefully those from my YouTube channel will kind of know what I'm talking about. Close below, close back above. So that would signify that the close below or the price action below was the deviation or the failed breakout below the range, trap shorts or sellers or whatever, failed breakout at one level, and then push from range low to range high. I think that would be pretty reasonable, and there's plenty of space for that setup on the intraday time frames, right? So you can even see the markets poking right now. So this is something to keep an eye on. Alternatively, if we just continue shitting through 74s, I really think the next big level is the macro retest at kind of the 50K range high here. You can see it's just moving from range to range. So, you know, this was one range where support turned to resistance. This is another cluster where the bullish setup failed. And this is all in the link video on the channel as well. So if you want to see these levels discussed while the market was at much higher prices, go check that out. But the good thing about Link is it's liquid and it trades really well technically. So trading level to level is a really good way to go, even if you don't have to take or don't want to take big bets with regard to the high time frame trend. So for me, any strength at 74s, I'll look to take an A to B setup from 74 to 87. Alternatively, if we get weakness through the range low, I think the next big area we kind of bet on Link is 50. And again, these clusters are simply previous resistance in the range and previous support in the range before the market ran away. Okay, so just to summarize that, high time frame I've got at support. If I get a bullish intraday setup around 74K, like a real effort to break below the range, which then gets reclaimed, I suppose if I had to draw like a very quick diagram of what that might look like, it would be like this. Just to give you an idea. So this is the pre-breakout range here, right? Lowest close and highest close. I want to see some sort of effort to push below the bottom of the range. And then if you want to be conservative, just the level itself is fine. Close below, get back above it. Something here would be reasonable. But the more conservative entry would be above the range which preceded the breakdown into the key level, right? So this is the consolidation, led to a low. does something below the level, and then the continuation long would be here in the cluster after its break. So something like A, excuse the touchpad, to B. So something like that would be fine. And again, the context would permit that because we know we're at weekly, the bottom of weekly support after just a period of straight selling. So even for just like a bit of a mean reversion or a meme bounce, that would be fine. But if this setup fails, or if there's just no support at 74s, we know that we're going to pretty much stay out, at least I'm going to stay out of the way of bearish momentum until we hit the more do or die levels at 50. And again, should it get down there, we can pretty much apply the same rules as we do to these technical structures generally, whereby where do we get long if the market trades back into a key range? Well, if you want to do business at the range high, it's the resistance turn support flip at the top. That's your kind of more aggressive trend continuation trades where it's just like retest, then we go all the way back up. Like that's the logic at the range high. What's the logic at the range low? Well, that's kind of as close as you can be to invalidation. And there you go from range low to range high, and then potentially higher for trend continuation. Okay, if we get really, not really technical, but my preferred type of setups, similar type of thing, trading back towards the range high, close below it, so it looks like a close back within the range that's bearish, but then which fails and ends up reclaiming it to trade higher. I usually like that sort of stuff, where this is the failed breakdown, close below the range, close back above the range, use it as support, and then trade higher. That's the kind of setup I like at the top of the range, and then pretty much the mirror image of that at the bottom of the range, as discussed here, where you get a failed breakout below, closes back above, right? And then some sort of continuation pattern from there. So again, this is a failed break back within the range. This is a failed break back below the range. Generally, when trading consolidations, as you may have noticed, I don't like to do so blindly, just hitting the levels with limit orders or anything like that. I generally like to see an effort by one side to break back within or break out of a boundary and then step on them when the market goes the other way, right? So an effort to break the range low which fails, or an effort to close back within the range which fails. Those setups tend to be my preferred ones when it comes to these technical structures. Okay, so yeah, long story short, first real pullback to weekly support, 74k, good level. If intradays let me, I'll pretty much look to take something like this, right, from support to resistance, pending the setup we discussed in a more kind of low time frame granular way. If not, then I'm just going to stay out of the way because there's another significant drop until the next level where I'd like to do business, another 30% closer to 50k. Okay, but my gut inclination is that there will be some sort of bounce play to be had in the 74, whatever, 70k area, kind of this consolidation here, or just this level here. So I'm looking for bounce plays on lower time frames in this fashion, essentially. Okay, and if not, I'm staying out of the way until 50k. Does that make sense for Link BTC?
Hit the like button if you enjoyed that analysis.
Yeah, that's Link BTC. Like, look, we wrote in the newsletter as well, but yeah, 50k is easily the better level. But that doesn't mean you can just, or have to, ignore everything that comes along the way. Even if it's trending down, or a larger reversal, or a greater retest, etc., there are still probably bounces to be played along the way, and, you know, shorts getting squeezed, etc., etc. So Link USD looks very similar in terms of its technicals, right? So forget the weekly time frame. You can see it's literally the same thing, just maybe looks a bit more, not dire, but no, it's pretty much the same, right? Let me just, here we are. Following the same technical pattern we talked about, where strongly trending markets don't offer these types of pullbacks. They'll just go from impulse, consolidation, impulse, and you have to just make do with the consolidation itself. That's kind of what we've got here, right? So you can see you have a huge level at $4.50, resistance, 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 then gets completely smashed. And at this point, forgetting the price action here, you're probably thinking, okay, well, that level was broken. I want to get on board a retest. And instead, what the market does, it just moves sideways and then puts in another leg higher, and there's no retest whatsoever, right? So with where the market is right now, it's testing, or it's close to testing, the bottom side of this consolidation, or the bottom of the range. I'd quite like, so 7.5 is the equivalent of whatever, 74K on the BTC chart. In a very similar vein, without drawing out the same chart over and over again, I'd really like to see some sort of effort to break below this consolidation, which then ends up in a spring, and at that point, either slight pullbacks for trades higher or retests of the level. Ooh, that's a bit extreme. You know, effort, no resistance on retest, so failed bearish retest, and back to the level itself. At that point, I'll be using, so just to give you the anatomy as clearly as I can, once we get A, a failed breakdown, and B, a close above the red box, whether it looks like this or again, failed breakdown, close above the red box, I'll look to buy it into probably this level here, prior lows, if not a bit of a big swing towards 12, 13K. I find that far less likely, but technicals is technicals. At the very least, if we get this sort of failed breakdown price action below $7, there will be some sort of spring, I think, or bounce to take advantage of. Alternatively, if your bearish link or this level just gets completely shit through, and the reason I'm entertaining both sides is, again, even when link is bearish, it likes to give technical retests. This is a really good example here. Ooh, no, that's not the circle. Let's use the arrows. This is we wrote about this level in the newsletter. This retest as well. So even if it's trending down, link is just quite nice. So there's plenty, and it gives you plenty of time to make reasonably informed decisions at these levels as to what side you want to be on. That isn't always going to be the case, especially when a market approaches its kind of final leg or it accelerates towards higher time frame levels. It tends to be less generous in letting you in or out of trades. But, you know, as long as it keeps doing that, I still think the nearest pivot is 7.5 and 8. If it gives me some sort of bullish reclaim event, which requires a close back above the upper boundary before getting long, I'll take it. If the underside of this level looks like the underside of this level, I'll look to sell it towards $4.50. Okay? But just like the BTC pair, if it hits the very extreme, that's invalidation as closest, high time frame support. I think if the lower time frame technicals set up as discussed, there will be some sort of bounce play to be had. One final point I want to make about Link is the real big macro levels are the ones where you essentially bet on trend. So when the market's moving from, you know, in these areas, kind of level to level type of stuff, as discussed, I give my preference to lower time frame trading, kind of FTA type of stuff. When we hit stuff like this, the macro kind of uptrend breakout level at $4.50 here, or 50K on the BTC pair, that's where I think the odds shift slightly from just level to level trading to this is either an uptrend or a total scam trading. And that usually comes or brings with it higher risk appetite as well as larger targets when it comes to selecting FTA. And that's kind of another part of my system that I think is quite subconscious, where if I've got, let's say, an A+, like a really good level here, and then an okay level in the middle, and then another really good level below it, I'll usually bet more size and trade more setups at the high time frame levels. And then in the interim, the setups that I take for FTA or bounces or level to level stuff in the less good level, the conviction on those trades just tends to be lower, and I might even avoid it entirely and think, okay, well, you know, something might happen here, might give me a bounce to FTA or offer something, even like on an intraday trading basis. But where I really want to get involved are the extremes, right? The top resistance, the bottom support, etc. And anything in between is for shorter term or smaller risk, all of that type of stuff. So applying that to this current chart, I think it's very much applicable. Betting big on the bullish side just makes sense for me on a reclaim of the pre-all-time high cluster. Like something like this happens, right? That's a kind of price discovery bullish continuation trade, right? So that obviously, in my view, not obviously, but in my view, warrants more risk or higher conviction. The same thing, like, is there a bounce to be played from this level? Yes, there is, right? If the technical is set up as we discussed. However, the bounce to be played at $7.5 or $8 is nothing compared to the bounce to be played at $4.5. Why? Well, because the stake's different, right? If $7.5 or $8 fails, what's the worst case consequence of that? Well, the worst case, we come back and retest macro support. Okay, well, that's not really the end of the world, whatever. However, if $4.5 fails, what is the consequence or worst case scenario there? Well, at that point, we have to consider high time frame, like weekly, monthly trend invalidation. So when looking at levels, I suppose one thing to consider is how much is at stake if this structure fails? Or what does it mean for the high time frame technicals if this structure fails? And if the answer is not much, well, then bet accordingly. But if the answer is, well, then the whole thing is completely different, well, then bet accordingly, right? A good example of that would be Bitcoin at 6K, right? Let's say 6K breaks down and then the market comes back in to retest it. Like this is, let's say, 6K support, turn to resistance, and we're right here. The conversation there is, okay, well, what happens if this level is reclaimed? It was like, well, it just looks like we're back in a bull market. So bet accordingly. Whereas some intermediate levels like 8K and 9K is like, well, what happens if this breaks? Like, well, we go to the next level of support or the next level of resistance, which isn't as important as, oh my God, the whole trend is bloody reversed. So I suppose the point I'm trying to make is some levels based on context, market structure, etc., just have different consequences. Not all levels are made equal, like A to B, B to A, FTA to FTA. Some levels just mean more, and I think it's important that a reasonable trading system, certainly one with discretion, kind of caters for what's at stake. Does any of that make sense, or was that a complete ramble? Jose says, Cred, when are you going to upload more TA videos to your channel? They are way more educational than roundups. The next video for my channel... Good question. I don't know. I think I've covered most of the beginner stuff I want to cover. There is some stuff I want to do. The next bit of content I've got planned is actually a article version of my entry triggers video, which is kind of old and not that great. So that's something I'm working on, which kind of answers your question. That's an educational thing. Just I'm going to make it from video form to article form. But yeah, I've got a list of stuff that I want to work on. So there is more stuff going to my channel. But the live streams, teaching and explaining stuff in a live environment is also very valuable. Yeah. So that's Link. I think level-to-level approach is great. The market right now is approaching an extreme boundary of weekly support, both for the USD pair, which is the bottom of this consolidation at $7.5, and the BTC pair, which is the bottom of the consolidation at 74K sats or whatever, so same levels, obviously. So I think short term, I'll look for a bounce play into intraday trouble areas. Long term, if anyone wants to bet on Link, I think $5 or 50K, whatever, that's the level that really needs to hold. Because again, if we look at how this weekly uptrend has played out, there have been no kind of real instances of long-term range breakouts failing to act as support, right? So again, obviously this is slightly cherry-picked, etc. Doesn't really matter. I'm trying to get a point across. Like long-term range eventually acts as support, right? Another consolidation does its job. Another consolidation. Again, it's not the clearest setups in the world, but you can see the highs pretty much flip to lows. Previously, they'd essentially get retested, right? However you want to... I think I've got a whole video on Link where I go over this point and I draw the levels much more reasonably. But pretty much during the course of this uptrend, price has not fallen back within an old range and stayed there after breaking above it, right? And so the most recent, but it has on the way up come back to retest them. Now, that creates an interesting dilemma for this range because not only was it, this is kind of the last long consolidation before the parabolic, if you will, break higher. So important points. One, it hasn't been retested, unlike the other examples we've talked about. But also, in the whole sequence, if you will, of the bullish trend, price has never fallen back within the range and then continued higher, right? So we can somewhat reliably take failure at the range high as a high time frame trend reversal signal, which means that if 50k fails, I think there's a big trade from the top of the range to the bottom of the range, and it'd just be a sign of reversal as a whole. I think is it the USD chart that's a bit clearer with this? No, it's not. It's the BTC chart. Whatever, doesn't make a difference. Long story short, like when a market's bullish, you really don't want it to fall back within old ranges. It just shouldn't, right? This is something the duck is very insistent on, especially in like fast-moving trending markets, etc. Like when you get a breakout from a consolidation, like that breakout event in itself should be so significant that there's no scope for. I mean, pullbacks themselves should be like low time frame wicks before moving much higher, if not just breaking from a range, consolidating, and then moving higher again. If a market kind of breaks out and then pulls back to the range boundary, like that's generally okay. Donald and I disagree a little bit on how good or bad is it for a market to retest its breakout level reasonably soon after breaking out. I think there's just a whole lot of factors that affect that. He generally is not a fan of break and retest in an immediate fashion, which I totally understand. But what we do agree on is falling back within a range is not great, because at that point, all the range breakout buyers are underwater, and that usually materializes or manifests itself in selling pressure to the downside, which isn't something you want to see in a breakout bull market, whatever. I don't think the Duck and I disagree on Link. I mean, we wrote the newsletter together, and he knows it's at support. Well, I think unless something's changed, we have the market at support. Doesn't mean he has to buy it. Doesn't mean he has to close his shorts or whatever. But I think the newsletter itself argued for a level to level approach, which I think is reasonable, and I agree with, obviously. But that's the thing with level-to-level trading that makes it quite attractive in my view. You don't often need to bet on the trend or be right on the high time frame trend to make money. Like, it certainly helps, and especially when you're swing trading like high time frame levels, you kind of need to be on the right side of the trend. But certainly for intraday setups, a lot of the really good levels traders I know essentially have a trend blind system, whereby they don't have some sort of indicator or technical factor they use to tell them whether price is trending up or down. Like, oh, is market structure bullish, bearish? Is, price above a certain moving average? There are really good levels traders who just don't give a shit and will sell support and buy resistance or flips at levels, etc., etc. And I think that's one of the advantages of a level-to-level system, is that even if you're worst case scenario on the wrong side of the big picture, you can still make money, even though it obviously won't be as easy. You can still take good trades that account the trend where it makes sense to do so. And I see that as a positive. Oh, he closed the shorts? Well, there you go, especially so. The bounce on the BTC, well, there you go. Yeah, I mean, that doesn't surprise me at all. With where the market is right now, makes sense. Makes sense. Whew. Are there any questions? Anything I didn't cover particularly well, or anything you want me to go over again? I think that was pretty much all that I had to say in terms of... Ooh, hello. Okay, so hourly close below 10.3. Ooh, this is interesting. I would really love this breakdown to fail, because then I'd get long if it looks like I want it to look. Like, if this bearish retest right now on a low time frame fails, or even if it spikes the low and then comes back and fails to find resistance at 10.3, that's something I'd definitely look to long, or like through these highs and closer towards 10.7. So that's quite nice of Bitcoin to do something interesting towards the end of the stream, because now you've had an hourly close below the level, finding resistance there. Ooh, yeah. I wouldn't be a fan of selling the underside of this level right now as it is, simply because if I were to use my normal stop function, which would be a stop above the thrust candle high, you can see that it's a terrible area to stop out because I'm essentially stopping out at resistance. This is something I still do to this day, like one of those newbie routine things. Wherever you want to put your stop in the market, just go Alt-H and draw it as a level and see if you're stopping out at support/resistance. If you are, it's probably not a good stop. But yeah, I'd quite like this bearish retest to fail, and then I'd look to get long into these highs, and then ideally 10.7. That's kind of what I'm looking for now. But I don't think it'll play out particularly quickly. Nice of Bitcoin to throw us a bone. Only on Coinbase, right? Let me answer some questions, and then we'll wrap up. 165 likes. You guys are the best. Thank you very much. Do you ever factor in fundamental things into swing trades? For Confluence, to some extent. If I think I've got a really clear view, I will. But I can't think of any examples where I've either sat out of a trade or had extra conviction because of some fundamentals. So I don't want to exaggerate the extent to which those things play a part. If you're a losing trader, would you be profitable if you take the opposite of your trade analysts every time? It really depends. I think it's just a better use of your time to try to get better as opposed to capitalize on you being bad. Especially if you don't know exactly what the reasons are for you being a losing trader or what your common mistakes are, etc. It could just be noise, right? And it doesn't give you like an actionable edge, even if you counter trade yourself. So I think just trying to get better is a better choice than capitalizing on how not good you are in that moment. Right. That's all I've got. That's all I've got for Bitcoin, ETH, Link, ETH BTC. We covered most of the good stuff. A lot of the altcoin Bitcoin pairs just kind of got trashed. So not a whole lot going on there, but the ones which have my attention, we've certainly taken a look at. Thank you for your patience with this new setup. I'm glad it was pretty smooth, all things considered. So I won't be going anywhere. And thank you to the Duck for covering on Monday. Thank you to Bybit for sponsoring Technical Roundup and not making us do cringy content to have their support. That's very cool of them. Make sure to click the links in the description to show them that we have non-Russian robot audience. That'd be hugely appreciated. In terms of content, I will try to get an article out this week on entry triggers, which will be one of my better educational pieces once I actually sit down and do it. I've got the plan, rough draft thing for it. I just need to actually do the work. And we have Casual Friday coming up the day after tomorrow. I think it just might be me, or might just be myself and the Duck. I think I'll take over. I can take a break after saving my behind, but we'll see what happens for that one. Final thing, like the video if you haven't already. Almost 200 likes. Very grateful for your support in that regard. The link to the newsletter is in the description as well, so you can check up Technical Roundup. And yes, thank you to my sister for her internet connection. Absolutely life-saving in that regard. That's all I've got, gents and ladies. Hope you have a fantastic Wednesday, and I will see you on most likely Friday. Bye-bye.